400 points. The Dow just blasted back above 50,000. And most investors don't realize what it means yet. Here's what's really going on. And what you should be thinking about right now. The Dow Jones Industrial Average surges more than 400 points today. That's not a rumor. That's happening right now. Cisco is leading the charge. The networking giant is posting one of its biggest single-session jumps in recent memory. And it's pulling the index higher with it. Renewed optimism around a Trump-Xi summit is injecting fresh fuel into market sentiment. Geopolitical tailwinds are real today. The S&P 500 hits a fresh all-time high. The Nasdaq follows. This isn't a one-index story. It's a broad headline sweep. Nvidia is leading the charge inside tech. The AI trade is alive. It is loud. And it is moving serious money right now. 50,000 on the Dow is a psychologically critical level. When markets reclaim round numbers like this, institutional algorithms trigger. Momentum funds pile in. The move feeds itself. But here's what nobody is saying about this yet. The majority of individual stocks are closing lower today. Read that again. The indexes are hitting record highs. And most stocks are still in the red. This is what professionals call a dangerously narrow rally. A handful of mega-cap tech names, Nvidia, Cisco, a few others, are doing the heavy lifting. The rest of the market is quietly getting left behind. Here's the uncomfortable question every retail investor needs to ask right now. Is your portfolio actually in this rally? Or are you just watching someone else's party from the outside? Market breadth is flashing a warning signal. When fewer and fewer stocks drive index gains. Historically, that kind of rally has a shelf life. It doesn't mean the market crashes tomorrow. But it does mean the foundation is narrower than the headlines suggest. First, audit your holdings tonight. Check whether the stocks you actually own are participating in this move or quietly bleeding while the index screams higher. Second, understand your concentration risk. If your returns are entirely dependent on 2 or 3 mega-cap tech names, you're not diversified, you're concentrated. Know the difference. Third, watch market breadth metrics like the advanced decline line. If breadth doesn't expand over the next few sessions, this rally could be running on fumes regardless of what the Dow number says. 50,000 looks great on a ticker. But the real story is what's happening underneath it. What do you think this means for your portfolio? Drop it below. The most interesting answers get featured next week. This video is for educational purposes only, not financial advice. Always consult a qualified advisor before making any investment decisions.